One could put it this way. Today it is about the competition between the greatest possible change in the way we pay for things and what will probably always remain the way it is, our love for our animal friends. Whether it is a dog, a cat or a mouse, they make us happy, but sometimes they make us poor. And that makes this topic exciting for investors. But can our four-legged friends win in this challenge against e-payments? I'm curious. The contestants in today's challenge in a nutshell. E-payments. It's about easy and quick payments without really realizing it's happening. But it's more. The data that's collected are interesting for many reasons. That is also why an entire fintech industry is being formed, which has taken up the fight against the established banks. And now to cats and dogs. Their health is now as important to us as our own. It's no longer just about food. In addition, wellness and luxury items are in demand. And when the four-legged friends get sick, it can become very expensive. Insurance companies perceive $1 billion business.
PayPal was launched in the USA in 1998 and is the pioneer in this sector. The road to success for the world's best-known online payment system led via simple payment for products acquired on the auction platform eBay. A transfer from purchaser to vendor without any bank being involved. NFC payment works without any physical contact. NFC stands for Near-Field Communication. Meanwhile, payments of less than €25 can already be made via a smartphone. In this area, the USA leads the field as regards both technology and valuation. For example, the US payment provider Square offers card readers that are connected to the headphone jack of a smartphone and is currently valued at 140-fold its annual profits.
So, we go to Paris to Valérie Planiol, Werthstein Institute Fellow, an industry with great perspectives and opportunities, right?
Yes, indeed. It's a broad industry which provides with more efficient and cheaper payment methods. And do not forget big data. Those companies, the fintech world, are really using big data to segment and target customers and provide for new products.
But you are also seeing some risk for investing in this industry?
Well, we don't really know who's going to be the winner in that race, and the cost of the regulation is so high that we see a lot of companies being bought out by much larger, well-established banks, for example. So I think at this point, with high valuation, I would rather stay on the sideline and see and look for longer-term potentials.
Valuation, the keyword for Giles Keating, president of the Werthstein Institute in London. What is the current valuation of the e-payment stocks?
Well, look, those valuations really just do look extraordinarily high. Take this company Square, for example, trading on a price-earnings ratio of about 140. That just seems extraordinary. And of course, this is an industry with good growth prospects. We're looking at compound annual growth, some people are saying of approaching 55%. But even allowing for that, I think these valuations just look a bit too high.
When it comes to methods of payment, you can't miss the new cryptocurrencies such as bitcoins. Curse or blessing for the e-payment industry, Robert Ruttmann, Werthstein Institute Fellow in Zurich?
Yes, it's true. The digital currencies like Bitcoin and several others have enjoyed a massive price appreciation in recent months. Although the penetration of these currencies is actually still very low, they are inviting increasingly consumers and also merchants to question the high transaction costs that established players are charging. So this growing awareness with respect to transactions costs could actually put pressure on profitability of established players going forward.
Thanks, Robert Ruttmann. After looking into a rather digital and virtual world, there are now beautiful pictures from a totally analog and real world. Lean back.
Ah, how pleasant a dog's life can be when master or mistress is willing to spend a small fortune on my well-being. Nowadays, instead of a bone, I get enriched, allergen-free pet food. And as regards quality, a lot of it's better than some of my owner's food. And once a week I get a massage, and can really relax. By the way, the days when I had to sleep in mistress's bed are long past. Now I've got my own luxurious nest. Ah, a dog's life is great and expensive.
Giles Keating in London. We spoke earlier about the growth rates of the fintech industry. Can the zeitgeist cats and dogs keep up with the fintech?
No, look, clearly it's a much slower growing industry. I mean, we're talking about 5% on some of the projections, and that compares to fintech maybe 10 times as fast. But it's a slow, steady kind of growth, and that's what I like about it. And of course, the valuations are just much more modest.
Thanks, Giles, and see you later. Valerie Plagnol in Paris, let's go through the individual areas. Who profits from this trend?
Well, pet care manufacturers are really leveraging on the growing numbers of pet owners and the willingness to pay for any kind of innovative and good products for their sweet little pets. Basically, retail profitability in that sector is between 35 to 45%. Profitability is also growing for food manufacturers, providing for the kind of food those pet owners are willing to pay for.
And with that, once again back to Giles Keating. There's still a whole different area which is a big deal for pet lovers.
Yes, that's the whole insurance for pets. You know, you've got to cover insurance against, for example, those healthcare costs. And if you look at it, there's a company, Mintel, a market research company, which says that the market for pet insurance in the UK can go from £976 million a couple of years ago to 1.6 billion in 2021. And look, that's good news not only for conventional insurers who are under a lot of pressure in their other business, but also for specialist pet insurance companies.
We stay in London and switch to Bob Parker, Chair of ICMA Asset Management and Investors Council in London and Master of?
Well, in our family we have 2 wire-haired Dachshunds.
And how much do you spend each year for your animal friends?
I would say normally, if one looks at it in euros, probably about 1,500 euros per dog per year. Now that's a normal year. If they have an accident and something goes wrong, it becomes expensive. So, for example, a back operation could easily cost 5,000 euros.
Now in our challenge is the zeitgeist cats and dogs versus ePayments. Which one gets your vote?
Well, I think ePayments, if you look at the companies in that sector, they're all very richly valued. So I think I have to come back to a more defensive, value-driven sector, and that would be the veterinary sector or anything associated with animal health.
And so on to the members of the Werthstein Institute. What is your vote?
Well, I like this solid growing industry. I vote for cats and dogs.
Yeah, so for me, the e-payments trend is too mainstream, too expensive, too volatile relative to the cats and dogs theme, which I think is really a perennial sort of long-term theme that is likely to be a lot more sustainable. And so my vote clearly goes for cats and dogs.
Well, my vote is also for cats and dogs. And that's because I agree with Valerie that I think this is a slow, steady growth story over many years. And it's because I agree with Robert that the e-payments just look as though those companies are too overvalued. So if we put this together, it is cats and dogs that wins over e-payments and becomes the new Werthstein zeitgeist.
Thus, a Werthstein zeitgeist does not always have to be the latest technological trend with exceptional growth rates. It can also be more conservative, in part as a counterpart to balance some of our more volatile zeitgeist. If you want to be an investor in the more conservative cats and dogs, then you can now add it to your portfolio.